bought a business that was paid $25 million for it net of cash, and it was earning about $4 million pre-tax then, and we must be getting close to $2 billion or something like that pre-tax that we've taken out of it. But it was only because
Warren Buffett, the Oracle of Omaha, is known for making some of the most successful investments in modern history. He's built multi-billion-dollar stakes in companies like Apple, Coca-Cola, and Kraft Heinz. But today, we're going to focus on a smaller, more surprising gem in his portfolio, a chocolate company. That's right, Box Chocolates. In 1972, Warren Buffett made one of his most famous acquisitions, purchasing See's Candies for $25 million. Now, over 50 years later, that investment has generated a return of more than 8,000%. So, what makes See's Candies Warren Buffett's dream business? Let's break down 5 key reasons why Buffett holds this candy maker in such high regard. The most obvious reason for Buffett's affection toward See's is the staggering return on his investment. The $25 million Buffett paid in 1972 has turned into more than $2 billion in pre-tax profits. And that's just the beginning. Let's put it in perspective. See's Candies was a modest regional chocolate retailer when Buffett bought it. It generated around $30 million in annual revenue and less than $5 million in pre-tax profits. Fast forward to today, and the company now generates over $380 million in annual sales, with around $80 million in profits. That's an astronomical leap for what was, at the time, a small California-based business. In 2019, Buffett shared the numbers in a rare moment of reflection. We put $25 million into it, and it's given us over $2 billion of pre-tax income. Well, over $2 billion. So, it's no surprise that Buffett has described See's as one of the best investments Berkshire Hathaway has ever made. But it wasn't all smooth sailing at first. In fact, Buffett almost didn't make the deal. He almost walked away due to a price difference of just $5 million. The seller originally asked for $30 million, but Buffett was firm on $25 million. Eventually, the seller caved and Buffett got his deal. If he hadn't, that $2 billion in profits could have gone to someone else. Talk about a narrow miss. Another reason Buffett adores See's Candies is its minimal capital requirements, which makes it an incredibly efficient business. When Buffett describes the company as a cash cow, he's not exaggerating. You see, See's Candies operates in a way that allows it to generate huge returns with relatively low capital investment. The company's business model is uniquely suited for this. Selling chocolates provides immediate cash flow. Customers pay for their candy up front, and See's only needs a short production and distribution cycle. That means there's very little capital tied up in inventory, which is critical for cash flow management. The company doesn't need huge infrastructure or a massive investment in facilities to operate profitably. It just needs good candy and loyal customers. Buffett often uses See's as a prime example of how a business can generate profits without requiring a huge upfront investment. In fact, he said that See's has only required about $40 million in investment from Berkshire Hathaway to generate over $2 billion in pre-tax profits. That's a return on investment that's almost impossible to beat. This steady cash flow has allowed Buffett to fund other ventures, expanding his empire and investing in other businesses that themselves generate substantial profits. It's a virtuous cycle. See's generates cash, and that cash has allowed Buffett to acquire more businesses, which in turn generate more cash, and so on. In Buffett's own words, See's has given birth to multiple new streams of cash. He even joked about it, likening the process to rabbits breeding. What started as a small investment has now become a key pillar of Berkshire Hathaway's diversified portfolio, enabling it to make new investments and take on larger projects. Now let's talk about one of See's Candies' most powerful assets, its brand. One of Warren Buffett's key principles of investing is finding companies with a moat, something that gives them a competitive advantage and protects them from rivals. For See's, that moat is its incredibly loyal customer base and its strong brand identity. Buffett has often pointed out that See's Candies is more than just a product. It's an experience. And that experience is tied to positive emotions, memories, and relationships. As he said in a 1998 speech, every person in California has something in mind about See's Candies, and overwhelmingly, it was favorable. Whether it's a gift on Valentine's Day, an Easter treat, or a small indulgence during the holidays, See's Candies has become a part of people's cherished moments. Buffett also emphasized the emotional connection customers have with See's, adding that, if we can get that in the minds of people, we can raise prices. The brand's loyalty is so strong that customers are willing to pay a premium for its products, something Buffett took full advantage of over the years. In fact, See's Candies enjoys a pervasive, favorable reputation with consumers, something Buffett wrote about in his 1983 letter to shareholders. It's not just the quality of the chocolate that keeps customers coming back. It's the quality of the experience, friendly staff, consistent product quality, and a brand image that evokes feelings of warmth and happiness. This type of brand loyalty creates a formidable barrier to entry for competitors. New entrants would have to work incredibly hard to replicate See's reputation and customer loyalty. And as Buffett often says, this loyal customer base allows See's to steadily raise prices, keeping margins high without losing market share. Another key factor in See's success is its exceptional management team and staff. Buffett has always been a fan of hiring great people, and See's has a long history of maintaining a strong, motivated workforce. It's a company with low turnover, dedicated employees, and a culture that aligns perfectly with Buffett's own values: simplicity, consistency, and integrity. As Buffett wrote in his 1991 letter to shareholders, "We've earned exceptional returns and had a good time." And it's clear that part of that good time comes from working with a team that genuinely cares about the product and the customer experience. Buffett and his partner Charlie Munger have often lauded See's for its strong personnel, and it's clear that the company's culture plays a significant role in its continued success. Whether it's customer service at the retail level or decision-making in the boardroom, See's has a track record of being run by people who know how to make the business work. Of course, at the heart of See's Candies' success is the product itself. The chocolates are high quality and consistently deliver a premium experience. It's a product that people love and trust, which is why they keep coming back year after year. Buffett has always said that a business is only as good as the product it sells, and See's has made sure that its chocolates live up to the hype. The quality is uncompromising, and that's why customers are willing to pay a little extra for it. Simply put, the chocolates are irresistible. In the end, Warren Buffett's investment in See's Candies has been one of the most profitable and enduring of his career. The combination of massive returns, minimal capital needs, a loyal customer base, strong management, and an exceptional product has made See's Candies Buffett's dream business. As Buffett himself has said, See's has given birth to multiple new streams of cash for us. And for Berkshire Hathaway, that's been the sweet spot for decades. Thanks for watching. Subscribe for more insights into the world of investing.